Mic check, 1, 2, 3. Happy Monday. Happy Mondays. Check 1, 2. We live or not? There we go. We're back up right there. It's really weird. Check 1, 2, mic check, almost there. What else are we gonna do here? QQQ, IWM. I guess we could look at we got the XLE stuff coming out, right? XLE RDDT, Reddit. Live stream. We got Twitch. We got YouTube. I need to do the Twitter stream soon. I still haven't done that. Restream on Twitter. Whoa, what's going on out there, baby? What up out there? Close all that down right there. Get rid of that right there. Get rid of that right there. But you're all wondering what's going to happen this morning, right? Happy morning to you out there. I got one quick thing I got to do here. Post that right there. Bam. And then what do we got here? Shareable link. Got a shareable link. Yeah. Close that thing bad boy up. YouTube. It says I spelled YouTube wrong. I don't know. Is that not one word or something? I don't know. Bam. We'll post that one right there. Hot sauce. Good morning out there. How's everybody doing? Welcome back. Short week coming our way. We have a bunch of special reports coming out to you. We had a special market brief last night that was miscategorized. I didn't notice it until this morning at 6 a.m., so I recategorized it this morning for you. But if you haven't had a chance to read that, make sure you read that this morning. We had almost a near perfect bounce as well this morning, but that doesn't mean we go up from here either. So we'll get into that as well today. There was a note here that I didn't put in that market brief that I should put in that market brief, which is the last time we had a short week, the Bears took over for the entire week. So I am interested in that in some respects. That I am interested in that in some respects of the how the week winds up, because it's a short week. Bears take over, something like that. Bulls are always kind of in charge, but I don't believe in that shit. Like just because it happened once before that it's gonna matter this week. I'm assuming that there's a bunch of Bears out there that are like, yeah, this is it. This is the top. We're gonna discuss that this morning. There's a full court press going on right now, and we're gonna go over all of it this morning. There's a full court press by mostly bond traders, long-term bond traders, like 20 or 30-year bond traders. They're pissed off, and we'll discuss it today. I think we're going to spend some quality time on that this morning. But to that point, too, this morning, you're going to get a bunch of special reports today from me. Like that market brief, that's a special report, a little bit extended view for you to take a look at the market over time. The other things you're going to be getting today are a big expose on oil, like CL, XLE, and then XOM, because April is typically the best month for oil. Now, you might not like oil. I don't like oil, but we have to look at a fact about life, right? There will always be some form of ICE vehicle. I know that you don't believe that, but there will be, or at least in the foreseeable future, next 100 years. There are use cases, rocket fuel, and then the big one, which some of you think about, but a lot of you don't think about, which is lubricants and plastics. Lubricants and plastics. Let me say it again. It is the only thing, not fuel. Lubricants and plastics are the only thing that stop us from being sent right back to the literal Stone Age. Now, personally, my own personal beliefs on this is like the Main Street hat on and the trader hat off. But even my Main Street hat, I realize that like lubricants and plastics are needed for the future development of the human race, and there's no way to get around that. People will say, "What about vegetable oils and stuff like that?" That might be a possibility down the road, but for now, it is not a reality in the world. You're talking about medicines, people being alive, you being alive. You being alive today is due to, believe it or not, mostly outside of like air and food and water. You're like your next biggest thing that people don't realize is that lubricants, plastics, are what makes the world what it is today. And we can talk about theoretically what we shouldn't have or do or whatever, but that's the reality. So this is a big month for energy. I'm sure that there's a bunch of you out there that even if I'm like, yeah, I love EVs, that are interested in that trade. So you're going to get a big expose on that. You're also going to get an extended outlook. This is for all supporters, all pro traders. You're also going to get an extended outlook on RTY, small caps. And that conversation for small caps ties into the bond vigilantes, which is what you see this morning. I posted the bond vigilante comic last night on Twitter, and I was amazed by it because there was a full court press starting on Thursday or Friday. Like someone just got stinky. And I thought to myself, who exactly is stinky about this? And it's the bond vigilantes. Now I'm going to shit on them and tell them it's not them, but it is those guys. Only those guys could pay for Wall Street Journal articles in depth like that, New York Times articles in depth like that. And it was basically like a rich billionaire begging his own. That's what it was. It's that simple and cut and dry. And it was shocking to see because I saw it all over the big rags, like the rags to trust. Then I saw it creep down into like market, what's it called? Market Beat or Watch or whatever. I saw it creep into Yahoo News. And then I saw it creep in all over the fucking place. It's everywhere. CNN's doing shit on this. And it's just people pushing their own. It's bond traders going, I want to get paid. So, when I see stuff like that, it does bring some concern. It does bring a little bit of concern because you're like, these guys coming out here right now or not. Are they going to take a sledgehammer to the market, start cutting it down? And they're pissed off because truth is Jerome and the Fed and the Treasury Department can prolong this for a long period of time. You're talking about a question that is still yet to be unanswered, which is, not answered. We are in a soft landing, whether they like it or not. Then there's a little Goldilocks zone in between, between that soft landing and the traditionally guaranteed recession. Now, there's instances in history where when we begin to cut rates, the market will sell hard, like really big, like straight violent down. And there are people that want that to happen. And it's funny because as I read these articles over the weekend, these are the same people, right, that don't tell you this stuff. These are the same people that on FinTwit have 100,000 followers, million followers. I'm not joking on this next point. Million followers, 500,000 followers, 200,000 followers. I heard them whine and whine and whine and whine about how the inverted yield curve, 2s and 10s, 2s and 30s, I don't care what you call it, 30s and 10s, whatever you want to say, 30s and 2s, I don't care how you mix it, cut it, dry there. I remember them. They only pushed one thing to you, which was the market will crash, or that the inverted yield curve matters. And I told you what? I told you repetitively, day after day, week after week, month after month. Bullshit that it matters. It's one of the worst. I'm going to repeat it again for you right now. It's one of the worst indicators for a stock market crash, period. And not shockingly, what do I see being discussed now? Well, it's also about unemployment. I'm like, well, we always knew that. And yet you failed to bring that up. You talked me down on FinTwit, but now you're using it. So it's like the inverted yield curve matters. But, oh, wait a minute now, man. It was so bad this weekend that a front page R News story on Reddit is being fed to young people that California's unemployment rate is so high and how that matters. And, it kind of does, because it is one of the most populous states in the nation, right? But it is not what's based on. It's not what's based on for a recession in this country as a whole. And so they're still pushing a narrative that unemployment matters. And right now, I'm going to explain to you about why unemployment does not matter right now. Right now, we have one of the lowest rates of unemployment in history right now for the nation. The Fed doesn't look at California and say, oh, that's it, we're totally fucked, we over-tightened. It's not just California, it's the entire United States. It's not just 3-month rate of inflation, it's the year-over-year inflation rate. It really is that simple. And not only that, it's like CNN's pushing like California, right? And then here's what's crazy, like the Sam rules. Sam from Vermont's in our audience, right? He spells his name S-A-H-M. Do any of you guys know why that is? It's the Sam rule. And I'll get into the Sam rule with you this morning. We're not there yet. Like the predictor of guaranteed recessions, we're not there yet. And unemployment's not there yet either. And as a matter of fact, I believe that the Fed is going to massage that even more. And the other issue here is the Fed, when they cut, how they cut matters. Historically, how they cut matters. They can cut, if they plan a cut in advance and telegraph it to you, they're non-adversarial. They say, expect a cut on this date. And they don't push it any forward. You're not going to get the violence that you're expecting. These bond guys want to time this. And they're pushing a narrative this week on Washington Post and New York Times this weekend. They're pushing a narrative that we've over-tightened. Saying you, the poor person out there doing that, this is someone wants to make money pushing that narrative. This isn't like, I don't know, a pomp or some bull that thinks that cutting rates is good for the market. This is someone that wants, this is like a whole different person pushing this out there, this narrative out there right now. And it's just bizarre to see it. Not bizarre, but, well, it's not bizarre. I've seen it right now why it's being pushed. There's a reason. They need to get a narrative out there. They need to change sentiment that when this cut comes, market doom and crash. You probably consumed this shit all weekend on Twitter. Almost guarantee you guys were like drinking the cups of it, like big giant gallons of doom and gloom over the weekend. But that's just not the case historically. We have no guaranteed recession right now. I'm going to talk to you about it right now. Why we don't. There's no confirmation. And not only that, if we get some good unemployment numbers, and everybody's focused on PCE, I'm like, fuck PCE. The real number that you need to be watching right now is unemployment, jobs, unemployment, catching up of wages, all that kind of stuff. That's what you really need to be watching. And the velocity in inflation and the velocity in unemployment matter too. Those are the things that actually matter. When you look back on the inverted yield curve, when you look back on inflation and unemployment and all this other stuff and cuts, like, why did they cut? Did they plan the cut in advance? Did they not? You could get no cuts in June. You could get a cut in June, and then he has already told you you're not going to get a back-to-back cut, right? Told you you're going to get one, maybe two or three, and they're not going to be together. That's all pre-planned. That guy could do all of that and then raise rates again. And when we have examples of this in history, and we got no crash in those periods because they were telegraphed. You knew, traders, investors knew what was coming. It's only, listen closely here, only when you get inflation, velocity inflation, where they even pushed this narrative last week. They were like, oh, well, I guess 3% is the new 2%, huh? That's all bullshit, too. That's just more bullshit by people that know better. People that are selling you a story to get 1 million followers, or to get you to read their newspaper, or to get you to watch a show, whatever the hell it is they're doing. The real truth is the same shit that I've told you from day one. Never changed. The story's never changed, and you're fed all kinds of garbage out there all over the place. It just blows my fucking mind. It's like this is like a few things you don't want. You do not want velocity, so you don't want to see inflation slam down to 2% and start ripping up higher. You don't want to see unemployment racing up higher, right? I'm going to explain the SAM rule in a minute here with you on that one. And then the other part is you don't want to have the Fed react in a way that is unexpected. And none of that's happening. As of right now, none of that has happened. Not a single part of it has happened. And they're pushing that narrative out there right now that it has happened, or it's now 3%, or unemployment has done the 3-month SAM rule, which it has not. Has not. So I don't know what to say to anybody out there that's trying to push that narrative, but it's wrong, still wrong. And I would not be shocked at all to see unemployment dip back down again the next reading that we get. Not at all. Would not be expected. Would not shock me in any way, shape, or form. So, anyways, I've always said to you, as long as the Fed is raising rates, bulls are safe. And they're like, well, look, he didn't do a rate cut cap, and the market dropped. I'm like, yeah, that's temporary. And when I say not safe, I mean straight down. Like you are, when the rate cuts come in and they're unplanned, and you start to see these other mechanics work in the background, like the unemployment stuff. If it's all at the same time, it's like a stew. And if you see it all at the same time at the right moment, yeah, the market is going to roll right over. It's gonna roll straight down, and it ain't going to stop. It's going to keep running and running straight down. But we're not there yet. And further even from that point, you can see it here with the tools. You can see when we're underneath the hourly trigger. You can see if the hourly trigger is racing down towards the daily trigger. You can see when the daily trigger stays up high or chases price down to the weekly trigger, which even shows a crash coming. So none of that stuff is there right now. So I want you to realize that out there if you're watching the show, that none of that stuff is there. Zero of it is. And you can, if you're one of those bond vigilantes out there, you can push whatever you want. So keep pushing it. Right now, Jerome Powell's got you by the balls right now. He's got you slung up in his hand by the balls. And I don't know how long that lasts. Sometimes it's short, sometimes it's long. That window can vary wildly. And I have never been able to find a way to say, yeah, 60% of the time this happens, 80% of the time that happens. We have to look for other things to get to that. Hey, we might roll the market down. So anyways, rant already on a Monday morning, a short week. Didn't even take long. Got fired up all weekend reading all that stuff. All right, what do we got going on over here? Let's start on CNBC this morning. Goldman gives 4 scenarios for stocks. Yay. And one what? Oh, one sees S&P 500 rallying to 6,000, huh? I got one better for you. We're going to spend some time this morning. Write this one down, too. We're going to spend some time this morning. 6,000, right? We're going to spend some time this morning discussing what a real bubble looks like. Because there's another discussion out there that we are in a bubble, right? I'm going to disprove that this morning. I'm going to take any argument that we're in a bubble, And I'm going to shit down its neck this morning and show you the proof that, number one, we're not in a bubble. And number two, you want to hear the scary part? If you want to see a bubble, how about trading? This is gonna blow your mind. How about trading 9 to 12,000 in a year or two? I can show that to you. What a bubble looks like. So forget 6,000. You want to see 9 or 12,000? I'll show you two prior examples in modern history this morning. I'll show you two examples. So 6,000 is reasonable. 6,000 is actually just trading where we are right now in the forward PE for SPX. Ready for this? Just from like 1995 to 1998. But what most people forget is what really happened from 1998 until 2000, which was the bubble. We had a 20% pullback, then we had a 28.7% pullback, and guess what? Guess where we went from there? The stock market went up 80% in like a year and a half. 80%. You're talking about going from today at 5,400, climbing higher, pulling back, 2 times vicious pullbacks. Vicious. And if I sat here and said to you, don't worry about it. Don't worry about it. We're going to 9 or 12,000, you would say, you're out of your mind, Captain. And if I told you we're going to do it in the next 9 months, you'd be like, Captain, there's no way we're going from 5,000 or 4,000 to 9 or 12,000 in 18 months. You'd be on FinTwit talking about the end of the world, how the market's going to zero. But I'm going to show you this morning that exact scenario that happened twice. You want to see what a real bubble is? I'm going to show it to you today. That's the second thing we're going to look at today. Next thing up, we've got Yahoo here. I thought we'd talk about this morning. We're going to come back to it. This is a discussion about Google, and we want to talk about what are third-party cookies for Google. I think I'm going to pass on this story for you this morning, but on your own, try to look this up. Later this year, Google, through its Chrome browser, will end its use of third-party cookies. Try to take a peek at this article and let me know in the chat what you think of this, or inside Discord what you think of about that article. But this is the big one, I guess, that I really want to talk to you about. This is from Yahoo Finance. Will this be the shortest bull market on record? These two recession indicators point to yes. This is a scam headline right here. This is not real. This is to hook you in. I hate the Motley Fool, but they have a good point in this article, so we're going to read it. I'm not normally a fan of the Motley Fool, but we're going to read this to you. Just 2 months ago, the new bull market became official. The S&P 500 closed at a new all-time high of 4839.81 on January 19. The broad market index has continued to rally since then, up more than 10% year-to-date at recent prices. That's a bubble, right? Remember that. Investors have fully embraced the new bull market, driven by the boom in artificial intelligence and expectations that interest rates will come down, according to the Federal Reserve's own forecast. Bullshit, too. Falling interest rates tend to grease the economy by making it easier to borrow, which helps a wide range of industries, including real estate, autos, and banking. More bullshit. I'm not going to bring it up right now, but on your own, if you go look at lending in tightening and loosening cycles, it's the Fed website. You can look at it. It's a chart. And since 1978, guess what? Companies do not care if they're tightening or loosening. They just don't care. They take loans like whores, no matter what. And if I'll bring that chart up for you later this morning too, because I've heard that bullshit spewed all over the place the past few days. More diarrhea. They've been partying like rock stars since 1978 through every tightening cycle. They take loans till they blow up, and no one stops them. You can actually see the curve of money lending never ever stops ever. So I'm going to disprove that one this morning. Now there is some truth in here. However, despite the seeming euphoria in the market, some economists are still convinced we're headed for a recession. In fact, two closely watched indicators are both pointing towards a recession. Let's take a look at each one and examine their implications for the economy and the stock market. Now, this is important here. Number one, the yield curve inversion. If you follow the stock market, you've probably heard about the inversion of the yield curve. This happens when long-term bond interest rates are lower than short-term ones. Typically, interest rates go up as bond maturities go longer, as investors require greater compensation to hold fixed income assets for a longer period of time. The yield curve tends to invert when investors expect interest rates to come down in the near term, which generally happens when the Fed Reserve cuts benchmark Fed funds rate to try to avert a recession, or at least cushion the blow. In 2022, the Fed raised interest rates faster than it had in nearly 40 years to cool off the hottest inflation the U.S. had since the 1980s. That led to a bear market, which the bear market, the yield curve inversion, and sweeping recession forecasts. An inversion of the yield curve, typically measured by the difference between the 2-year yield and the 10-year yield, has accurately predicted a recession every time it's occurred since 1966. You'll see some people out here saying, well, we're in a new market right now. By the way, we're coming back to the hourly trigger. We had a near perfect bounce this morning. We're now trading the hourly trigger. I don't care if it squeezes above or if it rejects, as long as we don't break the previous low from this morning as a heads up. On that occasion, the GDP fell sharply, but the economy did not enter recession. The 210 yield curve has been inverted since July 2022, and the gap has widened in recent weeks, as the chart below shows. I love this right here, right? The gap has widened, right? Based on that gap, it's clear investors still expect the Fed to cut rates, and that typically happens because of a weakening economy, right? Weakening economy. So if you cut rates once, but not twice or not back to back, right? And you're taking the hand off of the weakening of the economy, right? What happens, right? We lessen the chance of going into a recession. Here's the SAM rule right here, right? SAHM. Sam from Vermont, if you're out there, I know your handle goes by that name. Another popular recession indicator, let me do this one, that appears to be on the verge of flashing red is the SAM rule, created by former economist Claudia Sam. This rule says that if the 3-year month average unemployment rate rises by 0.5 percentage points off the lowest reading within a year, the economy is headed for a recession. In February, the unemployment rate rose to 3.9% in spite of strong job growth, and that was up half a percentage point from the 3.4% reading in last April. While the 3-month average has not yet reached the point that would signal a recession, it's clearly nearing it based on February's reading. A high March reading, for example, could trigger the rule by tipping the 3-month average above the threshold. The SAM rule, has predicted every recession in modern U.S. history. Every recession in modern U.S. history. As increases in the unemployment rate tend to portend sharp job losses as a recession hits. Let me explain this very closely to you, okay? Every recession in modern history. So if you had one indicator, one, that could do it for you out there, it's probably the rate of unemployment, right? That's probably it. They tend to pretend sharp job losses as a recession hits. The chart below shows how the upticks in the unemployment rate have coincided with recessions. Is this time different? Right? Something of a trap, fundamental rules, blow up, right? Blah, blah, blah. Hold on. Verts. Regarding the SAM rule, though, this is where we want to get to, the juice of it right here. Let's read the rest of this right here. Regarding the SAM rule, the unemployment rate is still historically low at less than 4%. And there's a lot of noise in the data because the labor force has shrunk because of the pandemic. Just as important, job growth remains strong. Job growth remains strong, right? Indicating the labor market is still robust. Sam herself made it clear that her rule had not been triggered. Let me read this to you closely here. Read that right there. What does that say? She herself, Claudia herself, said, the rule has not been triggered. Say it one more time. The rule has not been triggered. So what are you watching? What should you keep your eyes on? Unemployment. And what else is strong right now? Job growth, strong. So we have not triggered this rule yet, have we? So we have no guaranteed recession, do we? Even though there's a narrative being pushed out there that we have, and we have not. There are other reasons to believe the economy could continue to expand. The AI boom has sparked a new race in the tech sector and beyond, and funding new effect, blah, blah, blah. This is all bullshit, too, in here. It's all crock shit. Means nothing. Jobs, unemployment was what means something. Given the length of time the economy has bucked the yield curve indicator and the fact that the unemployment rate is still low, I think the economy will skate past a recession. So even though you got all these guys out there, and they're all just like screaming at you, we are still not there. Does that make sense? Any of you guys out there getting this? Clear as day. And now this is another key part. However, whatever happens, investors should remember that recessions are a normal part of the economic cycle and there's still a risk of one happening, as Fed Chair Jerome Powell reminded us in December. Absolutely. And we will be guaranteed one. In between, ready? You got your soft landing. You'll get dates on this. Like they'll say, this was the start of it, and this was the end of your soft landing. Then you have a Goldilocks moment in between that. Now, that Goldilocks moment, you can't assign that shit to anything. I've looked at it like 10 times sideways. My eyes are crossed because it could be a year and a half, could be 10 years. There's like a space in between. And then you get the dates for your recessions too. But the key point is that if you have a soft landing, it's always followed. Or if you get a recession or you get a soft landing, either way, there's a Goldilocks period. And then you're followed by another recession. We're in a soft landing right now. Then we're going to get our Goldilocks, and then we're going to get our recession. It's also worth remembering that the U.S. stock market has recovered from every recession in its history, including the Great Depression, global financial crisis, and the coronavirus epidemic. Now, interestingly enough, they did not mention in here the tech bubble, which they should. And I posted a market brief to you last night showing you, if you're a supporter or higher, I showed you last night where the PE ratio is. I'm going to go more in depth with you this morning on that PE ratio. There's more to talk about. We're going to jump to that right now. But we got to get this out of the way because this really drove a hair up my ass over the weekend. Especially that these assholes are going to CNN, they're going to Wall Street Journal, they're going to fucking New York Times, they're going to like all the highbrow shit. And they're pretending themselves to be telling you the truth when they're in fact lying to you. I mean, there was guys on Wall Street Journal this weekend like, oh, we have over tightened. I'm like, wait a minute here. I'm like, we haven't tightened enough. And I'm a bull. Like, you're out of here. Who's writing this shit? Who's this coming from? So let's take a look at that right now. We're going to take a look at something important. This is something important that I need to show you here. Please tell me I didn't delete this shit. All right. Thankfully, I didn't. This is the S&P 500 forward PE ratio. There's a few things you need to know about this chart right here. It's disgusting. This is a horrible line, by the way. This is not a good line. We're going to get rid of that for a minute. But you know, your boy Gunlock out there comes out and tells you, every time the market's down, right? He comes out there, see that white line right there? He comes out there and he begs on CNBC, right? It's always right down here. It's like the market's going to crash. I'm like, bullshit. He's either poor or making his money off managing other people's money. But I'll tell you what, him and his posse, anyone that's 67 years old, guess what they've been doing? Fucking partying. Fucking partying since 1978, baby, right back here. Whoop. And like clockwork, they come out and they buy it. Yeah, that line right there, right? Woo, let's buy that one. Woo, let's buy that one. Woo. Guess what they started doing? Yeah, they started buying that one. Guess when? In May and June of 2022. They bought it again in October. Woo! October 2023. Woo! Just partying. Woo, woo, woo. No matter what you say, that's what they were doing. This is when we changed the rules of taxation, the rules for banks. This is when banks started need to make money in other places, right? Getting more aggressive in the stock market. Cocaine, baby. Modern monetary theory right back here. It actually started before here in the 1950s and 60s, but with tax codes and shit like that. This is when rich people, filthy rich people, stopped paying their tax rates like they once had. It's a whole nother story we got to go into down the road another time. If you're not a reader, you probably don't know about that stuff. But anyways, 1978. This is when Reagan came in power. This is when everything changed. This is like big cocaine nose job. And there ain't no looking back from it. None. Until I see something different, we bounce underneath here, right? Until I see a material difference, they're going to keep doing it until it breaks. What else matters here? Let's look at something else that's really important here. Look at where the current PE ratio is right now. Let's take a closer look at it. So look right here. Came up right in here, right? Party time. Yeah, baby. Push right back down. Party time. Push right back down, right? What is that right there? October. Party time once again, right? Almost like we want to break above this, right? Almost like they want to start smashing higher, right? And what can we look back in history at some examples of when we push higher? Let's look at the first one. Guess where this first one is? Let's take a look. These are previous historic bull runs and bubbles. This is the first part of one right here. Okay, this is the first example right here. This is 1995 until 1998. I'm going to show you exactly this one right here specifically. But then I'm going to show you this is the tech bubble. That's not the tech bubble. You'd think this is, but it's not. The bubble's here. So if you want to see an example of the tech bubble, I'm going to show you that. I'm going to show you the GFC as well. And I'm going to show you the run. Well, I don't need to show you the run for COVID. You already saw it, right? That's 2020 and 2021. But I want to go back here and show you these right here, these party times. This wasn't you. How many money managers were managing money down here? They're like 30, 40 years old. They weren't fucking doing that back here. They probably don't even remember it. They probably haven't even gone back and looked at it. I bet they haven't. So let's look at something. Let me show you what a bubble looks like. I'm going to show you what a real bubble looks like, right? We're going to talk bubbles. This white line right here is where we are currently. Okay? And look at this. Big push up, right? I'm going to give you some dates here. Write this down at home. I'll write it down with you. You ready? We'll write this down together. We're gonna do crayon gang together. So you got this run right here. This is February of 1998. And we're going to look right over here. This is April of 99. But here's where it gets fascinating. Right? We got October of 2000. And then we got the real party. And actually, this little bump in here is kind of cool, too. There's a cool little bump pullback here. I think this is a 20% pullback. And then you got the peak right there, January of 02. I bet you there's bears out there that would want nothing to do with this right now. They're like, oh, please, Captain, don't do this to me. We're going to do it, though. We're going to do it together. Let's do this one right here. We're going to do, we'll do SPX because it goes back farther. Let's go to a daily chart here. Let's go back there and see what happened. Let's get a history lesson going. We got February of 1998, right? Right there. Let's do some measuring here. That was a 31% rise in the market. 31% rise. We came back down. Look at that violence right there. Came back down right here, what? 29.19%. This was a pullback. And that's from right here, not even from this low, not even counting any of this stuff back here, right? Then we got April 1999. Right there. That's the trough, right? Then we have October 2000 right here. And then we got January right over here, the big roll, right? Now let's go back and look at a couple things here. Let's look at 1995. This is where I told you we're in that run, right? If you had a run, right around there. Now let's start to measure some of this stuff. You're in the run from 95 to 98, right? Hold on, right here. You get a rise of 100%. 107%. This is a 100% rise in the stock market. 100% rise right there. You had a pullback. What? Wait a minute. That's a 100% rise. We just came from 3,500, right? We're looking for 6,000. We haven't done that, have we? We haven't done that at all, have we? We'll start it right there. Haven't done that at all, have we? Have we done a 100% rise yet? Nope. On that, you had a 27% pullback, right? What do we have after that? How much higher do we go from peak to trough on that pullback? Whoop. Wrong one. $67% from peak to trough from here to here. Guess how far? Guess how much of a run this was? Let's take a look at the whole thing. 170% rise. I mean, just look at that. We're not even going from down here yet. We're not even talking about that. 170%. 170% rise. This is just 2000. And watch what happened here. Do we ever see this low back here? Never again. Never again. We saw our new low. This is a big one, right? And this is the big push right here. 2007, 2008, big run all again, right? So even with these two here, this is this bubble here, right? 170% rise. Have we had done 170% right now? No. Are we up 170% from the trough? 3,500. No. Are we at 7,000 right now? No. Are we up into a bubble yet? No. What would a bubble be from previous experience? What would it be? Look at the start down here. Is it from right here? What's that? 245% raise. Where do you want to measure it from? 170%, 250%, 100%. Where do you want to count the actual bubble? This one's 245% in the first day back here. So when people tell you that we're in a bubble right now, we're in a bubble, right? They tell it to you all day long. We're in a bubble, we're in a bubble, we're in a bubble, we're in a bubble. From peak to trough right now, the trough was what? 3,500. What would be a 100% gain? 7,000. What would be a bubble? You ready for it? 9 to 12,000 in a couple years. So if we run right up into this point right here, right? You figure back here, this is 94. To the top is 2,000. 6 years. And we've already made it to what point? Right around here, right? We're right there right now. So what do you want up here? If we have that left to go, if this is the bubble part, do I think we're going to 9,000 or 12,000? No, I don't. But coming back to this chart right here, we're at the start of it. If we continue higher, we're only at the start. We're not even at the last part of it. And we haven't even discussed this one over here, have we? We haven't discussed that one. We just discussed this one. And we're right there right now. And this isn't even the part of the bubble. This is just the beginning of the run. We haven't even gotten up here yet. We haven't done any of this in 2008, 7. And we haven't even come close to COVID. Haven't even come close yet. So anyone that tells you out there that we're in a bubble and we can't go up anymore, it's because we're retesting this previous high here and they know what happens. We could have an explosive breakout to the upside. And when you hear people this morning, you see, I just showed you this morning, what is this guy saying, Eric Goldman's? 4 scenarios for stocks. One sees the S&P 500 rallying to 6,000. 6,000 is shit. It's the low end. It's the straight low end. It's conservative. It's not like you want a bubble? How about 9 or 12,000 in the next 2 years? 3 years max. Could you even imagine? You can't even wrap I know bulls can't even wrap their heads around that. Do I think we're going there? No, I don't. But let's have a bigger view out there as to what is a bubble? Are we guaranteed a recession? Has the Fed changed course? None of that has happened. 0. Is unemployment shown itself a guaranteed recession? No. No, 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 no. And if anything, you should be more concerned about a rip to like 9,000 or 12,000. And most of you aren't old enough to remember when those times happen. You got the experience of COVID, but most of you are not 60, 70 years old. We're not trading back then. These were people that put in $10,000 and let it ride. And they came out multi-millionaires. Let me say it again. Multi-millionaires a few short years later. Few short years later. They rode that shit all the way up. Woohoo! So we are not in a bubble. Don't believe any of the shit that you hear spewed out there. They're lying to you. The facts do not support it. They're lying. Lying, pants on fire, lying. Let's go to the trigger screen really quick, actually. What do we got going on here this morning? What did the market brief tell you this morning? Expect this to get bought, right? And it did get bought. We're now trading up into the hourly trigger. I always like the more time that we spend in here. We've got the 1 minute and the 5 minute coming up. We got a bull cross in the 1 and 5 minute trying to smash through the hourly trigger. You know my take on this. I prefer to trade above the hourly trigger, not below it. Hold on 1 second here. Where's hold on one quick second here. Bring that down here. Got to do my rotating charts for you this morning. Let's go to the main screen then. What would I prefer to trade here? If you're, well, wait a minute, let's go back to the trigger screen. My preference would be to at least break right about there and take this trade right here. I'd rather see price come up here, whoop, get above the hourly trigger, take out this high, this previous high right here, take it out, bam, right there it is right there. Come back down for a retest and watch the 1 and 5 minute trigger come underneath, create a 4 trigger bull cluster, and ride that bad boy up. What I don't like seeing is big squeezes, like poof. That stuff usually comes back down, we roll down to the downside. I really like to see like grind, 3-hour look back, and then we start pushing higher and continue on to the upside. So as of right now, for me personally, no trade. I like this. This is beautiful. Gorgeous, nice structure. Love it. Looks great. Let's see how this plays out. We have a short week ahead of us, right? Let's see what you guys are saying out there. Good morning. Happy Monday. You're going to get this morning, if you're a supporter or above, you're going to get an expose on oil. You're going to get an expose on small caps. And you're going to get an expose on gamma this morning, vol surface, that kind of stuff this morning. Now, I'm going to have to work on that. I've got a little bit of work I have to do before some of that comes out to you. Some of it's getting pushed out right now, and I got to do my side of it here in just a minute. But be looking for those. Those are going to be open to every level. Like if you're a supporter or pro trader, both are going to get it today. Don't expect it as a supporter down the road. You're getting one update. The pro traders are going to get it every other day and shit like that. But if you're a supporter, I know the reason I'm doing this too is because there was a friend of mine on Twitter that said, I'm paralyzed right now. I don't know what to do. His name is Vol something, not Vol Signals, is another guy. And I like this guy a lot. He asks great questions on Twitter. I forget his name right now. I talked about him last week. And if people are paralyzed, they don't know where we're going. We tell the pro traders where we're going. So I'm like, well, fuck it. We'll tell everybody. So that you're not paralyzed. Dude, David, great morning, right, brother? Kick-ass morning. Okay, so what are we doing here? Good morning to all of you. I can read your I can't read the previous chat, but if you want to say something or you have a question or anything like that, let me know. Good morning, David AMS. How are you, brother? Good to see you, my friend. Did you guys all have a great weekend or what? David AMS saying, watch soybeans. Nice seasonal setup going on. Does Tom Lee go down as the GOAT? I don't know. I think Tom Lee follows me for a reason. That's the truth. That's the actual truth. He can take the credit, though. That's fine. Good morning. How are you, Topo GGO? Good to see you. Did you guys have a good weekend this weekend? What do you guys think about all that stuff that was pushed this weekend? Did I have a good birthday? So I have a family member that just had a baby, and so we spent the weekend checking up on them. Rivian Bears trying for single digits. You're golden. Right on, right on, right on. Yeah, if this is a bull market, we're just getting started. That's the point that I'm trying to make to you. And if you think we're in a bubble, you haven't seen shit yet. Do I think we're going into a bubble? I don't know, but we ain't even there yet. We're not even in a bubble yet. If you want to see a bubble, you're gonna see a run to like 9,000 or 12,000. Do I think we're going to 9 or 12,000? Hopefully not. When's the hot tub stream? We need one. We need a hot tub stream, 100%. We might get one here soon, though. It's possible. It actually is possible we can have a hot tub stream soon. Yeah, okay. So let's do a couple other things here. What tickers do you guys want me to put up this morning on the rotating chart down below? Well, no, wait. How about that? All right, well, how about that? Before we get there, hold on. I'm getting boxed out airs this morning. Bubble money would be good. I can't say I wouldn't like bubble money. I just wouldn't like trading it. Hold on. Before I ask you guys what you want here, we got to do one quick thing. We're going to go over SPX Gamma. Let's update SPX Gamma this morning. Hold on one second here. Let's make sure we got everything right on Gamma this morning. I'll read you some more news. Oh yeah. Nothing. Oh, a little bit of change there. Well, this is interesting. Let's take a peek at this. You guys are dooming it up out there, aren't you? Like I did notice this morning, you are dooming it up a little bit. You guys are drinking the Kool-Aid. Gamma flip this morning. A little bit higher, right? It's now sitting at 52.20. We have a little bit more development of puts to the downside. Look at that. A little bit of fear last week. See that? Into Thursday and Friday. You guys are getting a little bared up out there. None of this was here last week. Interesting. Local support is more like right up here. SPX Gamma. You guys are getting a little paranoid. What else can we notice to the upside? We have some really nice call development coming into the market, right? All the way up to 5,400 now to the upside. This looks more like range expansion to me, more so than it looks like full-on doom and gloom, right? Let's take a peek at this. A little bit of range expansion here. Do you see that? A little more ability to go to the downside. A little more, I got to hedge, panic, but also still that range expansion on the upside of 5,400. It'll be interesting to see. CTA positioning, institutional positioning into the end of quarter. As you know, we have a short week, but as we come into the end of the quarter, we're going to get the JPM collar that'll come out. If you're a supporter or higher, you got a market brief last night that discusses it. I would be fascinated to see what the strikes are that come out for Q2 and where the expectations are. Do all three strikes come out lower than current price? Does the top strike come out around 5,500? Does it come out at 5,300? Where does that top strike come in at? Where does the bottom strike come in at? I'll be fascinated to see that uh, role of the collar, because if that collar comes in higher, it shouldn't affect the market. But if it comes in lower, that 0-day trade could be out the window, right? If there's an onset of sentiment shift in the marketplace. Right now, it looks like some of the market sentiment is shifting. You are drinking some of the Kool-Aid out there. So I am aware of it now, and not only am I aware of it, some of you are positioning for it. Let's go back to the main screen. Well, yeah, if you get the market brief, you heard that, right? That there's a rotation going on you saw the market breadth indicator, right? And that you're getting the rotation into small caps, right? We would have had, if you read that, you would have read what? That we have the rotation out of the S&P 500 and Qs, but we're not having the following of large moves in price downwards, right? Implying that the rotation out of S&P 500 is actually heading somewhere in the market. Or what we can see right now is IWM and small caps, right? I've been talking about that trade for a few weeks now. I think this would be week 3 or 4, somewhere in there. And there's a rotation into small caps on the idea of a rate cut in June, pricing that rate cut in, regardless if we actually get the rate cut, right? What would you expect if we don't get the rate cut in June? You would expect small caps to blast to the depths of hell, right? And you've got the bond boys out there that are trying to trade that TLT trade, right? TLT's been turning up for the past 3 or 4 days. That's another one that's coming out to you guys, I think, today or tomorrow. The long for IWM is probably next week. Nah, we called the long 2 or 3 sessions ago, and then we called to take your profits on Friday open on IWM. Near perfect trade for small caps. Near perfection, to be honest. Good morning, Uncle JBJ. How are you? How are you, Uncle JBJ? Good to see you. What about the oil trade? So the oil trade, you're getting a full breakdown today. Supporters and above are going to get projections on the 1 hour, the 4 hour, and the daily or weekly. This morning, you're getting that. You're going to get CL, XLE, and XOM. Didn't I say that earlier in the broadcast? I swear I said that earlier. Ooh, Cybertruck. I'm going to call her this morning and see if she will come on the show and we can discuss it. Some of you know this and some of you don't. I have a lot of family and friends that have worked for Tesla since day one. And some have left and some have come back, some have not. Some went off to do some LiDAR stuff. Uncle JBJ, you saw that, right? Yeah, baby. That was good, wasn't it? You see that little foundation thing, the laser engraving on the side? It was pretty badass. You're only on private Discord. If you're on private Discord, ask someone to share it with you. Should be pretty simple, right? You guys are a community. If you're in the Discord, you should be asking people to show you stuff. Do you guys want like do you want me to see if I can get you guys some video of the inside? You guys want some like a walk around or something like that? Yeah, you guys we're a community, right? If you're in the private Discord, you should be asking your fellow members in there, right? Can you guys show me what the brief was? Just be like, hey, man. I mean, I don't know if they're going to want to do it for you every time. They're probably going to tell you to pony up for the for the $32. I think it's $32 a month, and you get access to the public Discord, and you get access, or you get access to the general Discord, and then you get access to all the briefs. The briefs are where it's at. Those things are popping, dude. They're banging. Like, they're stupid good. Stupid. They're stupid good. Like the market briefs are like the way to be watching, man. Ask anybody. Those things print like mad. They print like stupid money. Do you guys not know that? You guys better be reading those market briefs. Those things print. Like, they tell you exactly where to buy, if it stalls, where to look for it to stall, like all kinds of cool stuff. Yeah, the bots are really cool too, right? Bots are super cool. We need to do, I haven't had the time. I think I do. By the way, I think I actually now have, I've gotten, remember I was like, I need breathing room? I think I have breathing room as of today. I think all of us do. I think Bork and I and Joe have breathing room like this whole week to get a lot more accomplished. Like, we're still in beta, so like we gotta like this week we're like, okay, let's start doing this and let's start doing that. We'll take a look back and see, like, we're gonna take a look at a bunch of different stuff and walk you through the Discord. I do recommend, if you don't have the Discord, if you're like, I signed up for everything, but I don't have the Discord because I'm not a Discorder, fucking create a name, put it in, and we are gonna do a live stream where we teach you, walk you through Discord. Yeah, dude, breathe. Like, we've been working like 18-hour days. I kid you not. 18-hour days. 18 hours, 18 hours, 18 hours, 18 hours. And this is the first breather. I think we're in a breather phase right now. Like, we're at a place where we can start banging out some new cool shit. So we should be seeing that happen between now and a bunch of stuff you haven't seen between now and like Monday of next week, and then the following Monday and stuff like that. All right, so here we go. We've got this SPX gamma. We know that you guys are getting scared. It's not good. This is healthy development down below, not quite doom and gloom, but it shows range expansion. If you are a supporter or higher, you can see I show you the range expansion in SPY and Qs. Today you're going to get another expose on IWM that's more in depth, so that you can see what the expectations for IWM into the June rate decision, where IWM should go. And then what else we're going to put up here this morning? Let's start with, why don't you guys pick some charts for me to put up there? You want Reddit? What do you guys want? Tell me what you want. Tell me what you want up here. Tell me what you want. Give me some stuff that I know you guys are, no low float shit, none of that stuff. No, I could do some memes for you if you really want. Hold on, you're going really. Hold on a second here. What do we got there? We got DWAC. You guys are giving me all the shit stocks. Tesla, NVDA. Hold on, ARM. We haven't done ARM. We'll do ARM. I like ARM. ARM's beautiful right now, by the way. Hold on, you're going too fast. Dixie? Who said Dixie? Jimmy Dunn. Jimmy Dunn. So you got, I like ARM here. ARM's beautiful. 30 minutes on ARM. If I didn't see what you just posted, you can repeat it here in a minute. So here's ARM. We're gonna do Dixie next. I love you guys, by the way. Good morning. Hope you all had a great weekend. We're going to put the dicks up. Everybody likes the dicks, right? Everybody here likes dicks? Oh, yeah, baby, the dicks. Whoa. Let's put the dicks up over here. I saw someone said NVDA. I saw them blast off this morning. Tesla blasted off this morning. We'll do both of those. We'll throw Tesla up here for you. Nice little squeeze on Tesla. There's Tesla 30-minute chart. Oh, there's that daily trigger. It used to be up at 200. Now it's down to 182. God damn it. Spoos wants to break out right now and try to trade 521.39, 521.45. Trying to make a breakout right now. What else did I see? NVDA. Nobody wants Reddit, huh? Nobody cares about Reddit right now? Everybody's like, fuck Reddit. Short it to the ground. Don't let it get to $100. Hold on. Did I see DWAC somewhere? Oh, look at that. NVIDIA coming in right now, right? Smashing higher. We need to get above what? 975.04. Well, we called the top on NVDA already, right? You guys already called the top on that, didn't you? Looks like maybe not, huh? GS calling for 1750 on NVDA. What did I see here? CMG. Yeah, that's right. Fuck Reddit. I agree. Let that shit go to zero. It was funny, too. I read a story this morning. I think it was from like the Washington Post or something, or the Wall Street Journal or New York Times. It was like, well, you know, Reddit kind of sucks as a company. I'm like, what the fuck is this? Like you talk out of one of your mouths and you talk out of your other mouth. Oh, yeah, baby. Let's see what happens here with Spoos really quick. Bears going to be mad, 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 baby. Mad bears out there. S&P 500 this morning literally opened at perfection. Literally opened at perfection for a bull. Posted a tweet this morning on Twitter. I'm like, do you have any idea where we just landed? Like a short week, right at the top of a 4-hour candle. Fucking, and look at it right now. Gorgeous right now. Nice recovery. Need to get above 520.96. Would really like to see 521.43. Come back down to Jesus moments. Have the 1 in 5 minute trigger come back up here. Create a 4 trigger cluster. Start making a run to the upside. Hold on here. I'm trying here. Hold on. ACHR. ACHR. Wait, did you guys say DWAC or something? Wait a minute. ACHR. 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 I feel like sometimes when I ask for tickers, ooh, this one's, oh, dude, what are you doing to me, Grubster? This isn't low float, is it, Grubster? We're not doing low floaters around here. I'm not doing that one. I'm not doing it. Ooh, DWAC, nice. Ooh, like it. Ooh. Oh, yeah, on Elf. DWAC. And then Elf. Hold on. DWAC. I feel like sometimes when I ask people to call out tickers, that I'm like, it's like the old school Jeopardy on SNL. Captain, I'll take ticker symbol WHRE. Whore, just like your mother, Captain. Shouldn't say that. My mother's probably watching right now. She's all mad. She's like, what did he just say? Elf Beauty. Let's see if this one. Oh, come on now. Let's go Elf. Ooh, Elf is nice. Whoever called that one out. That's a good one. Nice little bounce off the daily trigger, confirming another upside move on Elf. Price is below the hourly trigger. So I would like to see another buy down here at 194.44, but that's beautiful. It's a nice structure. I like it. I like it a lot. Oh, it just came up. Ooh, very nice. Oh, yeah. Nice breakout following the market, it looks like. Nothing special, I guess, to some extent. We can leave it up for you. You asked for it. I'll leave it up for today. If this is your ticker you're in. All right. Now, that right now is how many tickers? 1, 2, 3, 4, 5, 6, 7. That's what we'll do for today. I'll take ticker number ANUS, Captain. I'm gonna spread this one out this so you can see it more clearly, because as we're not right there, and we're right on the gamma flip down here. Cleaned up all this back here. Local support sitting down at 5,200. And I want you to be aware of something, okay? Get a notepad out at home and write this down for me. I want you to write this down for me, okay? You're gonna see underperformance from SPY and QQQ while we rotate into small caps. You are going to also see a launch point, as long as we are bullish, a launch point off Qs and SPOOs from 5,200. You might see a little doom and gloom every once in a while down to 5,000. You might see a pullback off of 5,300 down to 5,000 on a corrective move. But you're going to be spending as a bull. My point here is, if you're trying to long Qs, you're trying to long IWM, you're trying to long SPY, start thinking about two numbers. I guess three maybe. 5,200, 5,100, and 5,000. That's gonna be some numbers you're gonna be thinking about. In 3 months, you're gonna come back to me and you're gonna go, this motherfucker told me to remember those three numbers, and that's exactly where we're buying the dip from. And we're going to be buying the dip from here for a little, maybe not 3 months, but like here into summertime. This is going to be your launch point right here. You understand me? So if you're trying to take longs from here into summer, this is your spot right here. Remember my words on this. Say it one more time for you out there, Momo Land. I love you, brother. Down here, right? This is where you buy the dip. 5,000, 510, 52. Mostly 52 until we get up to 5,500. Then you'll see a corrective move back down to 5,000. But down here in this zone, this is where you're a bull buying. You're going to see a lot of people out there, though, that are buying at 5,300 when they shouldn't be. Buying at 5,500 when they shouldn't be. So we're going to get range expansion. And you're going to see that range expansion be buying dips off 52, off 5010, or 510. I get 511 or 5100, 5,100, and 5,000. That's going to be your place to be buying a dip as a bull and smashing this market up. We're going to smash it. We're going to smash it. We're going to smash it. When we're done smashing it, right, you're going to get a correction in about August. July, August, somewhere in there, right around 5,500. Maybe 55, right around 5,500, 5,550. And it's going to roll down. A big bloodbath. It's going to be bad. 490 maybe, 4,900. That big bloodbath down from 55, 5,600, that's going to be your dip buy for the big run. And that run is going to be disgusting. It's going to be near vertical. It's not going to end until likely March of 2025. That's going to be your presidential run, and it's going to be a beast. I got it. I don't know the exact time frame for it right now, but there's should be a major roll end of summer, like a big one. And what it is, it's like front running the volatility for the election. And then they're going to run it up into the election on you, and you're going to say, Well, I was drinking the Kool-Aid and they told me the market was going to crash because, election volatility. They're going to run it right up into your ass in the election. They're going to wheel out Art Cashin. They're going to bring him, you remark my words. They're going to bring him out the morning after the election. They're going to pretend that that he's in the pits and there's like millions of people there. They're going to have the fake like noise in the background. And they're going to ask him and he's going to say right to you, nothing has changed. And the stock market likes stability. And I apologize, the market's going to continue to go up. And they're going to ramp this fucker more right through the end of the year and into the spring. Now, the only thing I can tell you about that right now that is unknown to me. Hi, Kitty. Kitty's here because it's springtime. She wants a boyfriend. And we don't let her outside. The only thing I can't tell you right now that is still a whammy for me on that part of the trade. No, this is not market unknown stuff, but is Trump. I don't know if he introduces the wild ass, if he is elected, the wild ass bullshit crazy that he did during COVID. Like gyna deal off, gyna deal on, gyna deal off, gyna deal on. Pressers at scheduled for 3:30 doesn't show up until fucking 3:50 or 4:30. Market just fucking bombs. Comes back out in the morning at 9 a.m. That kind of shit is the only unknown to me, unless there's like some bad event that we don't know about. He is the real volatility wild card that we know about. If he is elected president, I fear that will happen. And shit could get wild as fuck. Oh, yeah. Oh, yeah. Oh, yeah. Roll that neck. And that's real. Now, I've heard some people say that he's not going to do that he's getting older. But you know what, man? It's just like Biden. It's just like, who's the other one out there? The Feinstein or Mitch McConnell. These guys, these women, these politicians, they never fucking change. They're the same way when they're 90 and 100 years old. On their deathbed, they're the same way. Power, greed, same story. You know what I say about being up here, right? This is not the place to be long or short, right? Place to let the algorithms do their thing. This can go either way, right up here. Very volatile up in here. Nice, beautiful, big gap to close up in here. Look at SPX Gamma down here. That's up on 52.34. Big giant gap needs to be closed. That's way up here. Arm another dip buy on its 1 and 5 minute trigger on a 30-minute basis. Turn this on, make sure we're rotating here. I'm going to read some stuff to you here before I take a break. Oh, yeah, this is stuff that they don't tell you. I got stuff for you this morning. I got some good stuff for you this morning. I'm going to be real quiet when I read this stuff off to you, okay? Coinbase telling me that my crypto portfolio is lonely. Yields are up slightly higher. 2-year up 2 BPS, 10-year up 2.8 BPS on Monday as forward rates shifted towards a more hawkish path. Once again, due to verbal interventions from Bostick and Goolsby. We already knew that they were going to come out on Friday and try to restate what the Fed was saying or what Jerome Powell was saying. Once again, due to verbal interventions of Bostick and Goolsby, maybe to neutralize some of Powell's comments. We knew that prior, right? We posted that on Twitter before Friday's commentary. We find this note from Goldman interesting. Powell was the real surprise for me. I expected caution, where I thought he would be hawkish on inflation and dovish on labor. He was, in fact, the opposite of both. Calling the inflationary prints of the January-February a bump in the road was quite an optimistic interpretation of inflationary backdrop that has refused to cool. This is a note from GS. To extent the chair's actions are reflexive, I thought last week's comments only further loosened financial conditions. At a time when many risk assets were already at their highs. And it's not surprising that equities took the statement as a green light to extend risk. I urge all of you out there, to follow Vol Wiz. His name's Scott. You can follow him on Twitter. He puts out a newsletter, and he has been slamming a hammer. This guy has been in the market since the 1990s as a professional. And he's slamming the hammer in his newsletter saying they have loosened financial conditions and they're not telling you. And Jerome has done it as well. And to expect Jerome to loosen financial conditions, why are you expecting a hawkish